Trevor Grivick here, real estate broker and specialist in working with DSCR loans and investors. And I'm going to go over Texas DSCR loans and why Texas might be one of the hottest real estate markets in the country right now. But if you're not utilizing DSCR loans, you could be making your life a lot more difficult. So in this video, I'm going to be breaking down exactly how a DSCR loan works in Texas, the requirements you need to meet, the benefits that make it a game changer for you, and the hidden costs that can eat into your cash flow, and also, most importantly, the best Texas markets for both short-term and long-term rentals. So by the end of this, you're going to know exactly where to invest, what to watch out for, and how to structure a deal to maximize returns. So stick around, because if you're serious about building your portfolio in Texas, this could be the most valuable 10 minutes you spend all week. So imagine qualifying for a mortgage without having to present pay stubs, tax returns, W-2s. Sounds possible? That's exactly what a DSCR loan can do. Okay, a DSCR, debt service coverage ratio loan, lets real estate investors qualify based on the property's rental income instead of personal income. Lenders use a simple formula, basically dividing the housing expense. So as long as the rental income is equal to or greater than the housing payment, which is principal, interest, property taxes, and insurance, the lender will loan on that property. And there are even lenders that go below 1-to-1 ratio. So here's the simple math that determines whether your property qualifies for a DSCR loan. The formula is pretty straightforward. It's the DSCR equals the annual rental income divided by the annual debt obligations. Now, the annual debt includes your principal, interest, property taxes, insurance, and any association dues. Understanding this formula lets you run the numbers yourself before applying, so you know exactly where you stand with the DSCR loan program and that specific investment property. So there's some unique factors when it comes to Texas for their DSCR loans when you're calculating everything, and it would be the property taxes and homeowner insurance. Texas property taxes are among the highest in the U.S., with effective rates between 1.47 and 1.8%. That's well above the national average. For homeowners insurance, it also has one of the most expensive rates in the country, averaging between $6,000 to $6,500 annually, compared to the national average of about $2,600. Coastal properties in high-risk areas, hurricane, hail, wildfires can even be more costly. So when you're looking at properties and you're just seeing, what it might cash flow and principal and interest and all of that, you want to make sure that you're getting quotes for insurance as well. So if you're looking to get a DSCR loan in Texas, here's what most lenders are going to expect from you. First, the property must be income producing. Think long-term rentals, short-term rentals, or multifamily. Lenders usually want a DSCR between 1 and 1.25, though we do have some that go as low as 0.75 with stronger reserves. With reserves, you would need reserves of approximately anywhere between 3 and 12 months. Credit score minimums are typically around 620 at the lowest, but most lenders want 660 plus, and best terms are going to be for those that have 700 plus credit score. For down payments, most are going to want 20%. We do have a few lenders that go to 15%, but I feel like it's more of a marketing gimmick than it can actually be done when you take the numbers with today's rates. Most properties don't ratio at 15%. Meeting these requirements is going to put you in a strong position to secure competitive terms with your DSCR loan. So I work with over 90 different DSCR lenders. A lot of them have different requirements. So you want to make sure that you're matching up your situation to the correct lender. For example, some lenders don't love short-term rentals. So they're going to be basically pricing themselves out of that market or making it more difficult to be able to qualify. Some will go with lower credit scores, but in that case, they're going to want to have other factors like reserves being higher. So it's important that you work with somebody that understands all of the rules of that lender. If you're getting gift funds, if you need to have where it's not seasoned, those types of things, that's where a broker can come in and really help you. When you're using a DSCR loan in Texas, choosing the right market is just as important as getting the right financing. Now, as far as the top yielding short-term rental markets, Brownsville tops the list, nearly 20% yields and $51,000 in annual revenue, plus 112% jump in listings. Corpus Christi follows with an 18.8% yield and over $64,000 in annual revenue, followed by steady tourism. Freeport offers affordable entry with over 17% yield, while Waco delivers 15% returns, thanks to Baylor. There are some emerging markets like New Braunfels, Port Arkansas, and Bolivar Peninsula are growing fast with fewer restrictions, and metro hotspots Houston, Dallas, Austin, Frederickson, and Crystal Beach offer high potential but require careful zoning checks. Now, when doing short-term rentals, if you send over the property address to myself, another broker, you can get air DNA, and the property can be pre-screened to see what it might qualify for before you spend any time on it. The AirDNA will tell us what we think the projected short-term rental income will be on that property, and then we can utilize that for the ratio. For long-term plays, Frisco shines with rapid growth, top schools, and strong job markets. Obviously, Fort Worth is still affordable but growing fast. Houston offers balance of $1,850 average rents and $350,000 home prices. Dallas, Fort Worth suburbs like Irving, Coppell, McKinney, and Forney see strong rental demand, while Wichita Falls, Abilene, El Paso, Amarillo, and Sherman-Denison provide stable, landlord-friendly environments. Whether you're targeting short-term rentals or long-term rentals, pairing the right DSCR loan program with the right market is key for maximizing your cash flow and returns. Now, if you're using DSCR loans in Texas to finance a short-term rental, regulations can make or break your deal, so you need to check them before you buy. At the state level, you must register with the Texas Comptroller's Office to collect and remit a 6% hotel occupancy tax on stays under 30 days, and then many cities add an additional 7 to 9% local tax on top of that. So for example, in Houston, you'll need a $275 annual permit, an emergency contact on file, and no event hosting. Dallas requires a $404 permit, property inspection, and a certificate of occupancy. Austin has a strict short-term rental licenses, occupancy rules depending on whether you live on site, and in Fort Worth, short-term rentals are banned in most residential zones, only allowed in commercial or mixed-use areas. Even if your city allows short-term rentals, many homeowners associations do ban them outright, so always check deed restrictions before closing. Knowing these rules in advance helps you choose the right property, the right market, and the right program without these costly surprises, so make sure you do your own research to make sure that you're not falling out of regulation, and then you end up having to maybe sell the property and lose money or turn it into a long-term rental when you're expecting it to be a short-term rental. So first-time investors can get a DSCR loan, but there are a few extra hurdles. As a first-time investor, this is going to be someone defined as they haven't had ownership interest in a U.S. investment property within the past 2 years. While you can still qualify, lenders often see first-time investors as a little bit higher risk, so to offset that, they may require a higher credit score, a larger down payment, a stronger DSCR ratio, or perhaps more reserves. So if you're new to investing, focus on building a solid credit profile, saving for a bigger down payment, and choosing a property with a strong income potential for your chance of approval. It's best that you talk to a lender broker ahead of time. They can tell you if you can qualify at the current moment or what you need to do to be able to make sure that you qualify in the future. In Texas, with their DSCR loans, prepayment penalties are allowed, so you need to make sure that when you're talking to lenders that you're asking them if there's a prepayment penalty attached with the actual rate and loan that they're quoting you. The most common prepayment structure for DSCR loans is known as a step-down, typically represented as a 5-4-3-2-1 or 3-2-1. What this means is that the penalty just decreases over time. For instance, in a 5-4-3-2-1 structure, the penalty is 5% if it's paid off in the first year, 4% in the second year, and so forth. After 5 years, there's usually no penalty for prepayment during the remaining term. Other structures may involve the fixed fee percentages such as 5-5-5, indicating a 5% penalty for the first 3 years without any step down. Generally, opting for a higher, longer prepayment penalty can lead to a lower interest rate from the lender. Some lenders also make any additional principal payments during the prepayment penalty period, also have to pay the fee. So make sure that you get very clear with whoever you're working with what the structure is of the prepayment penalty, including if you plan on making any additional payments to the loan or any principal payments to the loan during that period of time. So let's break down the key differences between a DSCR loan and a conventional loan, so you can see which one might fit your investment strategy best. So with the DSCR loan, you're looking at a minimum 20% down payment in most cases, 660 credit score. The rates on DSCR loans are typically higher, but you will deal with fewer documents. Personal income debts don't matter. So if you have a lot of different write-offs that you may not typically qualify for, you probably want to go the DSCR route. Also, you can close in an LLC, big plus for many investors, and the process tends to be a lot quicker. Lenders are going to use 100% of the market rents from an appraisal 1007 form. A 1007 is just an appraisal of rents, meaning when they're doing the value of the property, they're looking at like properties, what they sold for, so they can give you what they think the property is valued at. However, for rents, they're also looking at like properties that are currently rented to gauge what that home would actually rent for. On the conventional loans, they're going to generally require less down, maybe around 15%, and you can get with a lower credit score, often a lower interest rate depending on situation, but you must meet the strict debt to income guidelines. Also, you can't close in an LLC. And the rental income that you would get on a 1007 form, they only are going to use 75% of that. So there are no loan minimums. For example, on DSCR loans, a lot of lenders don't go below 150,000. Many below 100,000 are out of it. So there's only about 4 or 5 lenders that I know that go below 100,000 with DSCR loans. So the bottom line, DSCR loans offer speed, flexibility, LLC eligibility, while conventional loans can be cheaper but have more qualification hoops to jump through. It really just depends on your individual unique situation. So make sure that you work with somebody that can look at both options for you, show you which ones, if you qualify for both, get into the details of the differences so that you can make the right decision for yourself. So the pros and cons of DSCR loans. First of all, we have less documentation. So really the only thing that you're going to need on a purchase for a DSCR loan would just be a purchase contract. Fill out a quick loan application, your driver's license, and then your LLC paperwork if you're closing in an LLC. And then just bank statements showing that you have the funds to be able to close. On the conventional side, you have to have everything else. Now, some of the cons, we've already gone over: prepayment penalties, higher credit scores, and then we'll get into interest rates tend to be slightly higher on DSCR loans just because they're a tad bit riskier for the lender. But for yourself, it is a lot easier to be able to get qualified and into the property. So DSCR lenders are basing their decision on rental income of the property, not your personal income. And since it's not a primary residence, they see it as a riskier investment. So typically you can expect DSCR rates to be about 1.5% to 3% higher than a conventional investment loan. But remember, every scenario is different and your rate will depend on factors like your credit score, DSCR ratio, and loan structure. If you have great credit, great cash flow, I've seen DSCR loans be better than investment in some cases. The key takeaway factor is a slightly higher rate when you're running your cash flow numbers, so you know the deal still works before you commit. When it comes to DSCR loans, you won't typically find them at your local bank or credit union. Most DSCR loans are offered by small private lenders who specialize in DSCR and other non-QM loan programs. These lenders often work directly with mortgage brokers to bring them qualified borrowers. Now, the good news is there's no shortage of options. Borrowers have a wide range of lenders to choose from, each with its own requirements, rates, and terms, but that also means shopping around is critical. By comparing multiple DSCR lenders, you can find the one that best fits your property type, investment goals, and long-term strategy. When it comes to DSCR loans, there's no one-size-fits-all interest rate. Instead, lenders look at multiple factors to decide what you qualify for. DSCR rates are determined by the following criteria. First of all, your loan purpose. So whether you're buying, refinancing, or cashing out can impact the rate. The product type, so it's an investment, even the size of the loan, all play a role. Your citizenship status, how long you lock a rate, can also make a difference. On top of that, lenders weigh your credit score, the type of property you're financing, where it's located, and whether it's a long-term or short-term rental, the loan-to-value of the property, the prepayment penalty terms, and then your chosen loan term all influence the final number. In short, every deal is unique. That's why shopping lenders and structuring your loan strategically can save you a significant amount of money and time. If you want to get the lowest DSCR rate possible, you have to ask the right questions up front. Don't just take the first number you're quoted, dig into the details. So start with the DSCR being used to quote your rate. Lenders can calculate it differently, and that can change the offer. Then confirm the credit score they're using. Sometimes a small score improvement can save you big money. Make sure that you ask what the prepayment penalty comes with on the rate that they're quoting, because a lower rate might come with strings attached, for example, a 5-year prepayment penalty. So get clarity on that and all of the fees like underwriting, processing, origination, because these can obviously add up fast. And finally, check if there's any discount points that are being charged to get that rate. Sometimes you're paying more upfront for a savings that doesn't actually add up over time. The bottom line, knowing these details lets you compare apples to apples and negotiate from a position of strength. The last 5 questions you should always ask before locking in your DSCR rate is the total fees listed in Section A of your loan estimate. This is where the lender-specific charges show up, and it's where you'll catch unnecessary markups. When can you lock the rate? This really matters because some lenders don't allow you to lock until an appraisal is back or an initial approval, and if you're not locked, it's not your rate, meaning that things can change. Will the lender do a rapid rescore if improving your credit could get a better rate? That small bump could save you thousands. So if their credit bucket into a better rate is 660 and above and you're sitting at 658, there is ways to be able to increase your score by 3 points rather quickly for a lot of people, and that could mean your eligibility for a better rate or even just for qualifying. Will the rate change if you close in an LLC? Some lenders price LLC loans differently, so know that up front. Also, if you decide to waive escrows, meaning that you don't want property taxes or insurance included in the housing payment, some lenders charge an upfront fee to be able to waive escrows. And finally, what the loan-to-value ratio they're using to quote the rate. The LTV impacts the pricing, so make sure it's accurate for your situation. So the bottom line is these questions give you leverage. They help you compare lenders fairly and avoid paying more than you should. When you're looking to choose a DR lender or broker, it's not just about who gives you a loan, it's about who sets you up for long-term success. First, look for flexibility in loan structures. The best lenders don't just offer one cookie-cutter program, they have options that match your investment strategy. Second, experience and expertise matter. You want somebody who knows the DSCR space in and out and can guide you through the process that you don't get any surprises. Third is competitive terms and rates. Don't just chase the lowest rate, focus on the full package of fees, terms, and flexibility. And finally, responsive customer service. When timelines are tight and money's on the line, you need a lender who picks up the phone, answers your emails, and moves quickly. So get these 4 things right, and you'll have a lender who's not just financing your property, they're helping you grow your portfolio. They're truly a business partner with you. My name is Trevor Graving. I feel like I meet all of those 4 criteria. I work with a lot of investors and homeowners, but the numbers tell the real story. Between May 2022 and April 2023, I closed 214 loans. I believe what sets me apart isn't just the volume, it's the ability to navigate complex programs like DSCR loans and structure them in ways to be able to help you grow your portfolio faster and smarter, and the fact I've owned my own investment properties. Now, my mission is simple: give you the clarity, options, and execution you need so financing becomes the easiest part of your investment strategy. As a broker, I have over 100 DSCR lenders. So if it's a cookie cutter deal, single family home, DSCR over 1, I'll just go to the lenders with the best rate. However, I get people with lower credit, or they have a first-time investor that wants to do a short-term rental or something that doesn't fit that cookie cutter box, and that's why we have all of these lenders to be able to go after. So I want to make sure I have the solution if there is one, so that my investors can come to me and know if I can't do it, the loan probably doesn't exist. Now, because I work with so many lenders, I can shop for the best rate and fees. I have a pricing engine that prices all of the lenders at the same time, and I can instantly get rates for you. You can obviously call around all day working with lenders or brokers, but you have to trust that person, what they're telling you, and then obviously ask them the 10 questions I provided to you earlier. Some lenders do not go consumer direct, meaning that they won't work directly with you. You have to work with a broker. I take a lot of pride in my ability to help my clients and provide great service to you. You can always check me out on Google or Zillow, all of my reviews. I just want to make sure when I'm working with investors that I can save time for you. So I pre-screen properties. I tell you what I think of the property. I have tools to be able to look at what rents and projected rents might be. This way you can fully analyze everything before you potentially go under contract. Or if you're going to go look at properties over the weekend, that maybe you eliminate a few and save some time and focus on the ones that will cash flow. If you have additional questions about getting a DSCR loan in Texas or anywhere in the country, you can go ahead and give me a call at 619-404-6637 or give me a text, or you can email me at trevor@rebrokerbuddy.com. We can set up a consultation. I can go over what your plans are. If you have a current rental portfolio, we can look at what that looks like for cash out to purchase more properties. Or if you're just at the beginning and you're a first-time investor and just have some additional questions, I can hopefully answer and provide some clarity for you. If you found this video helpful, please follow my channel, like, and comment below, and check out my other videos on DSCR loans so you can be more informed.